Hello traders, welcome to another daily analysis. Today is January 18th. We are just 15 minutes to 11 p.m. Eastern Standard Time. So let's get into it. Today was generally quiet since yesterday's large movement from British pound and a whole roller coaster ride from the UK. Now, I've already explained the phenomenon in this kind of events and how you can really try to profit from it in the future. But because of this large movement, of course, the second day, without really too much catalyst, it tend to be quiet, and that's what happened today. It was quite a very non-movement session. So the London session, we have employment data of British pound. It was actually a beat with both average earning and climate count change. Both are positive deviation. And I did got into that trade to buy into cable. Now, however, I buy into pound yen. However, the price did not react. The reaction was quite muted. Now, we're gonna explain that later on in the chart. And then the New York session, we have CPI number from US, which was also quite positive. It's not a deviation. So the result, the market reaction was again quite muted. Now, you might wondering that you saw US dollar gaining a lot of strength today. That was really nothing to do with all the data. No, the US dollar gained strength for two reasons. The first is the gain strength against Canadian dollar. Now, Canadian dollar was actually a large movement today, which I got into as well. Now, the reason is because the Bank of Canada released its interest rate, which was unchanged as expected. So really, the mover came in at the press conference. So during the press conference, the government told us, basically saying that the rate cut possibility is now back on the table. Well, first of all, it was never off the table, but the whole stance completely changed because from the last meeting, Bank of Canada was still very neutral. They were still saying that they're not looking to cut interest rate until 2018. Now today, they actually saying that the rate decision, the cut possibility has back on the table. That's not only the only driver. The second thing is that you probably heard the news that Donald Trump, his team, a transitional team, has already sent out official letter to inform Canada that their intention to scrap North American Free Trade Deal, NAFTA. So that is basically the reason why Bank of Canada say that the interest rate cut is back on the table. It's because if the trading with US gets affected in the future, that US is Canada's largest trading partner. If that gets affected, it might cause a significant effect for the Canadian economy. So that's why the Bank of Canada basically saying that if that happens, they will have to stimulate the economy again by cutting down the interest rate. Now, if you're looking at in a micro perspective, now you have a country that is really facing an uncertainty of economy. And not all trading deals are equal, but US is such a large trading partner with Canada. So we don't know whether NAFTA will be eliminated or not, or what will still remain duty-free, but this alone causes enough volatility of uncertainty for Canada. That's the first thing. Second thing is that you now have two countries. For US, only have one way to go, that is to tightening the economy and higher interest rate. That's for sure, right? Right now we just don't know when is it gonna happen. But for US Federal Reserve to raise interest rate, it's a certainty. On the other hand, for Canada to now, not only they don't have a raising interest rate possibility, they might have to cut it. So now you have this fundamental element plus the sentimental reason to get into the trade. So as soon as I heard that in the press conference, I actually got in a little bit late, but nevertheless I jumped in the trade, in intraday trade, and that was my trade. And afternoon, of course, Yellen spoke, and the content was again, it's quite. I don't really like to because I was not there live, so I don't really like to guess what the content was, either dovish or hawkish. But nevertheless, what you want to see is the market reaction. So the market apparently treated as very hawkish. So that's why you saw a US dollar surge from the afternoon, prior to the New York close. And that was really where the US strength comes in. It's actually from Yellen's speech. Now, equity market was mixed today, with European market turned green while US was mixed result. Now, as mentioned, that the market was sort of in a panic mode, risk of sentiment through the past days, ever since Donald Trump's press conference. So today, of course, we are, it's very likely, as mentioned, to see a recovery, and that's what we saw today in the European market and a little bit in the US market. Now, oil market, of course, it's a red day, it's a down day. First of all, because the US dollar has regained strength, that's going to pressure, and that has pressured the oil market. Second thing is that tomorrow we will have the crude oil inventory, and the general expectation was a large build up. The reason is because, as mentioned, the oil price is kept rising, and U.S. shale oil producer has taken this opportunity to increase their output, because they're not part of the OPEC member, and they're not going to really play along with the OPEC, the basically rivalry with the OPEC. So basically taking an opportunity to increase the oil output, and of course that's going to hurt the supply. So going to hurt the demand, because then we have more supply of the oil. Then that's going to hurt the oil price. So the two factors really pressure the oil market today, also pressure the Canadian dollar. So that's why Canadian dollar become very weak currency for today. Now tomorrow, risk event is ECB conference and the rate decision. Now rate is of course expected to unchanged, but again the press conference will be the headline, because Draghi will give out a direction for euro, and that's really something we can take a look at and perhaps trade through it. Crude inventory will be another catalyst for either further sale for Canadian dollar. At least that's my bias right now for Canadian dollar, is to further sell it. Now Yellen again due to speak at New York session tomorrow. I don't know what's the content right now or what it's about, but things, you look at the market, you realize that she really has this tremendous power to drive the market. So of course, whenever she speaks, it's best for traders to sort of just pay attention to that. Or if you have a trade that you want to maybe take, then try to avoid taking just before that speech, unless you have some strong fundamental reason to do that. Tomorrow we also have the Chinese GDP, with the first GDP release for 2017, and that will be a very important event, basically set the risk sentiment for the global market. And really now China is so big that their economy affect the whole mood of the market. So if that GDP is a beat, it's going to increase the risk on sentiment, further help Australian dollar and New Zealand dollar. On the other hand, if the GDP result is a negative, going to cause some panic movement, and that will help Japanese yen and Swiss franc. Okay, so that's basically the fundamental picture of the market right now. And the tradable events, of course, tomorrow is ECB conference. That's the first thing. Crude oil inventory, you can trade that with the bias to sell Canadian dollar. At least that's from my analysis. And Yellen is about to speak. Most likely, she will give a similar content today, because unless she completely contradicts herself again, but most likely she will keep emphasize that the market has a little bit, not only recovery, might be a little bit overheated. So that means they might have to really tighten the interest rate further. That, of course, is going to help US dollar further. And the Chinese data will also come in Asian session, which you can take a look at it. Now, I don't really treat the Chinese data as a risk event, but it's a good fundamental data to take a look to understand the overall picture. So today, first thing first is our daily trade. I got out of the CAD trade at actually 86. Now, I didn't get out because of the handle or anything. Really, I got out because of the new fresh information, and now I just don't have any confidence for Canadian dollar for now. If the NAFTA, I don't know how to pronounce it. Maybe if the North American trade deal really again gets affected, that's really a significant economic risk for Canada. So that's why basically I really don't have any fundamental reason to hold on to this trade anymore. So I got out of the trade. Of course, we recovered a little bit, but really it's looking more to the downside. Today, of course, it's indecisive candlestick, but I just don't want to hold this trade any longer. If you didn't get stop out, you can still hold it. It's really up to you of how you want to play your own trade. And our daily trade of Euro NZD. So I'm still holding this trade, but I've set it to break even, which is not too far away considered in the daily perspective. What's going to happen tomorrow is that this trade, either the ECB conference is either going to help us or it's going to stop us out. And that's why I said to break even, because I don't know which direction it's going to go. So the future catalyst might be a good way for us to help us, or it might completely reverse the direction, such as what happened in Pound NZD. So that's why my management tend to be kind of passive for daily trade. Really have a bigger perspective. So I'm just put to stop loss to break even and see how it playing out. The reason is because I really don't know what's gonna happen. So if I don't know what's gonna happen, I don't want to forcefully to direct the result. I really just let the market tell me what it's intend to do. New Zealand Swiss franc, on the other hand, I did not move my stop loss. Now the reason is because it's not really in the headline for New Zealand dollar, for New Zealand and Swiss franc. So what's gonna happen tomorrow is that if the ECB give a very positive outlook for euro, of course euro is gonna go up, but that's really not gonna change the overall financial market. Perspectively speaking, in terms of Swiss franc and Japanese yen, right? It's just only going to affect euro and US dollar. On the other hand, if ECB give a very negative outlook for euro, that's also going to help US dollar, but that's also not going to play too much effect into Swiss franc. So really, my point of view doesn't have enough strong evidence to either tighten up or do anything about it. So I just leave as is. I know it's still there's still risk in this trade because we are not at break even. You can certainly move to break even. The reason I don't want to move to break even is because 71.50 is a handle. So I don't want any whipsaw to stop me out. So I just leave it as is at 71.41. Of course, it's not really far away, but for me, that's just the way I decide to do. Decide to see, hey, if this basically, if you take a look at, basically I want to see if this space here can hold on to it. So that's why I don't want to be too tied up with this trade, but I also don't want that the original risk of 1% to be hit. So that's why I really only risk about 20-30 pips, and that's really less than 0.1% of the risk capital. So I'm happy about that. For me, that's just really my management for this trade. The other trade that I actually already got in, I apologize for my late daily analysis, but the other trade got in is dollar yen. So obviously we have these large bullish candlesticks. Now I got in again during the Asian session, which I know some of you are against to do that, but for me it's really not about which session, right? For me it's really the micro picture. So I got in with very simple reason. First of all, it's because today the US dollar really turned around and looks like it's gonna regain strength. That's the first criteria. Now, and the fundamental data of CPI today also emphasize the fundamental strength of US dollar. So on top of that, we do have the Yellen speech to further help the sentiment. That's the first reason. Second reason is that we do see an equity market sort of turn around into a more positive area. So that gives a more risk on sentiment for the equity market, and that further pressure Japanese yen. So these two reasons alone makes this trade quite interesting. Now, technically or sentimentally, you know that US dollar has been largely sort of to a quite attractive level, as I mentioned. This is a nice area to get into. So my stop loss is actually very far away, way below 112.50, probably all below this area. So we'll see what happens. For me to get stop out, it's really something catastrophic happen for US dollar, which might happen. We never know what's going to happen in the market. But other than that, I do know that the worst outcome, we might go into the sideways movement, but I do expect to keep going up. So that's just my fundamental analysis for this trade. Do have a nice big shadow here, and we also have a good enough reason to get into it. Now, if we get stop out, that's just the nature of the trade, then we will maybe wait further down in this 200-day moving average, which will be even attractive to get into a dollar yen long. So that's the 3 trades I have for daily. The other trade I have is dollar CAD. This one I got in intraday at 132. No, actually 131. 131.65. So I really got in at, right here. So this is where I got in, and I'm still holding it with this trade. I moved to break even already. Now, still holding it, of course, several reasons is because fundamentally the trade is still valid, that this catalyst today is big enough for Canadian dollar to be sold off. On the other hand, US dollar regains strength, and on the other hand, the oil market is also being pressured. So all these things combined together makes me decide to hold on to this trade. Now, of course, it's really your own personal preference. And what can happen is you can get stop out at break even. Now you already you have to be fine with it if you like to hold on trade. So this really depends on your own psychological aspect, and that only have to answer by yourself. Really, only you know how you deal with this kind of movement. But for me, I will hold on to it purely because the reason to stay in the trade is still valid. And tomorrow, the crude oil, I do expect, I do have the bias for the ECB, of course. I do think ECB will actually continue to basically continue their QE. And the reason is because facing the uncertainty of US, they are not really going to tighten interest rate too fast. It's really depend on exactly what happens. So central bank, if they are conservative enough, then they will have to really hold on to their point of view. Second thing is that in 2017 in Euro, there is three major political events from Holland, from France, and from Germany. So that also is going to play another effect into Euro. So I do have a general bias. I admit it. I do have a general bias toward downside for Euro, and that of course is going to help US dollar. I'm also hoping tomorrow Yellen's speech will further help US dollar to surge higher. Now, third thing I'm expecting is the crude oil inventory as expected to be a large buildup. So those are basically the fundamental reasons for me to keep staying in this trade and hoping it to continue going higher. Now, technically, of course, you see such a strong green bullish candlesticks, and that's of course just shows the strength. Now, in terms of daily chart, I think you can definitely buy it, but just knowing the risk for any US dollar trade is really not tomorrow. It's really Friday's inauguration. So the risk to hold any US dollar right now is Donald Trump. Now that's again going to either help you or hurt you. And that is the uncertainty of trading. And nobody knows what's going to happen. It really depends on whether you're willing to take this uncertainty of risk. Because honestly, guys, if every trade is a sure thing, then everyone will be making money for sure, right? So every trade, there is always an element of uncertainty that you as a trader are willing to trade your money in front of that uncertainty. That is, from my perspective, the hardest part of trading is really how to deal with that uncertainty, how to deal with that loss, how to deal with that win, so things like that. So from fundamental perspective, dollar CAD is a good trade to buy. If I was not in, I will like to buy it, either this one or dollar yen. And fundamental perspective, it should keep going up, but the risk again is Donald Trump. So be careful. if you want to trade this trade. So that's pretty much it for my current trade. And let's take a look at our 28 pairs to see if we have anything. Actually, I already know I don't really have anything, but for education purposes, let's still go over it so you can see how I analyze the trade. The first thing is Euro Pound. Now Euro Pound, today, very small indecisive movement, but you can tell this huge drop from yesterday. So what's it gonna go? Where it's gonna go? We don't know, right? Depending on what happened to the ECB tomorrow. Euro Swiss, on the other hand, also dropped. I think it's sort of the hint for you to see. Let's keep going. Euro dollar also dropped. Euro Aussie also, it's a down day. Euro CAD, it's an up day. Euro New Zealand, it's really an up day, an indecisive day, and Euro Yen. So, really nothing, couldn't tell too much about from looking at this picture. The only thing, traders might start pricing in for the ECB conference, but we really don't have a certainty which way it's gonna go. So that's why I tend to stay out of it. If we are if we are 48 hours into the risk event, I generally don't like to put a trade into it, right? Because the best way to do in front of the risk events, if you are in the trade, like for example, I'm in Euro New Zealand trade, the best thing you can do is to move to break even. Now, if you're getting too close ahead of the risk event, you might as well just get out, because your break even will most likely get hit. So there's really no meaning to do that. That's why I generally wait 48 hours. If I have something that's really big enough, such as this kind of interest rate conference, this is a huge major risk event, I don't like to get into it less than 48 hours. Basically, I like to get into at least with more than 48 hours, more than 2 days of time. So that's why I got into it last week. Plenty of time, I was set to break even, and we'll see what happened. So that's really the best scenario for me. Pound Swiss franc, again, not really much going on. Cable was another down day. So every British pound trade, retrace as usual. That's what happened when you have a large movement like yesterday. Pound Pad also went up. Pound New Zealand also went down and went up a little bit. And Pound Yen. Now, I was in this trade, by the way. I just now remember. I was in Pound Yen and was really kicking myself for that. Now, why do I say it? It's very interesting. So what happened is that I got into Pound Yen during a risk event. So the result of average earning climate account change for Britain was very positive. So I got in at this candle. The result came in at 4:30 Eastern Standard Time. I got in at this candle, and as you can see, it does not work out. It actually goes against me. But I hold it because I do still believe in the trade. But I only, when the afternoon, it start picking up the strength and actually goes to one-on-one. Unfortunately, I got out before this green candle. So it's really, I basically got out 5 minutes before it start going up. And of course, you can never prevent this kind of movement, right? I mean, talking about bad timing. But then I just look at the picture and realize that why did I even get out? Was there really a reason for me to get out of this trade? And at the end of the day, I realized it's just my fear of uncertainty. Right? For me, the fundamental reason was still intact. I do think British pound will keep going up versus Japanese yen. And I do think if you're just looking at the momentum, it really is going to the upside. And now also looking at the trade, we're not really going to the downside. So all these elements I could have and should have really hold on to it. I got out because of that, that feeling of fear. And that's just the way you constantly have to deal as a trader, that you cannot ignore your emotions. And sometimes I shouldn't say sometimes, I should say 100% of the time, you make that decision out of the emotional reason. And for you, very important is to be aware of that. Now you are going to make mistake like this, but be aware of that. Write down your journal so that next time you know exactly what's happening here. If you are repeating the same pattern of your own emotional pattern, then you know how to deal with those problems. So basically, my problem getting out this trade was not really a fundamental reason or any sentimental reason. It's really just my own fear. So that's why learn my lesson, hopefully it will be a better timing next time. So that's pretty much what happened for me in pound yen trade. Okay, so let's keep going. Swiss franc, Japanese yen, same thing, a large movement for Swiss franc. Japanese yen is really one of the weakest currency right now. We'll see what happened to CAD yen to decide who is weaker. So dollar CAD, I already mentioned, dollar yen. Let's take a look at CAD yen first. And then we'll know who is really the weakest currency for today. So CAD yen, again, it's very indecisive. So it means they both are really, really weak on across the board right now. That's again another reason for me to get off the CAD yen today. Aussie Swiss, Aussie dollar. Yesterday I did not take this trade. Even if I did, it will not get filled. But I didn't take this trade because of today's CPI and Yellen speech, but mainly because of CPI, which I'm not sure. I was expecting today to be a turning point for US dollar because of the CPI. And then today is the turning point for US dollar, but it's not because of the CPI, right? It really came because of the Yellen speech. So Aussie dollar, Aussie CAD, really just keep aging higher for Australian. Aussie New Zealand, again, keep going higher, and Aussie yen. So Australian dollar is really quite strong. Now, this is a good big shadow candlestick again. And looking at it, it's quite tempting to take it. The only thing I'm really worried to take any Aussie trade is that the strength of US dollar has slowly come back, and that might further diminish Australian dollar. But on the other hand, because Japanese yen is being sold, so this might be a good trade to take. Now, nevertheless, I did not take it because I'm already in a Japanese yen trade already. I'm already in dollar yen. So for me, that's the reason I don't like to basically overexpose in one currency. That's just I know my sounds very conservative for some people, but that's just my way to deal with it. I don't like to expose too much because everything is correlated. If tomorrow equity market for whatever reason dropped, if the market become very panicky, of course Japanese yen is going to gain a lot of strength and pretty much going to stop out all Japanese yen trade. That's why I don't like to get into a single currency pair with two different. Basically, I don't like to get into it with same too much overexposure. Now, you might say that I'm in both dollar CAD and dollar yen. Well, that's because dollar CAD has already moved to break even. So for me, that's a very important criteria. So it does look attractive. I have to admit it, but not going to do a daily trade. I might actually do an intraday trade. But I will take a look at hourly chart to decide it. It really does look pretty good. CAD Swiss, on the other hand, continue dropping, and that's just the nature of it. Again, not looking to sell it because it's really against the fundamental side too. I know Canadian dollar is weak, but not as weak as Swiss franc. So for me, I don't like to get into this kind of reversal in the fundamental aspect. CAD yen, I already talked about that. New Zealand Swiss, New Zealand dollar, New Zealand CAD, and New Zealand yen. So guys, that's pretty much it. If you take a look at New Zealand dollar, I did not get into again. If I did, I'll be in trouble right now because I'll get filled, and now it's really, it's really hurting me. It does look like it's gonna keep going up. We are actually tasting this very near-term resistance. It might keep going up. So I didn't get it because of the risk events, and that's just another thing I really like to trade with the fundamental picture in mind. So sometimes you avoid a lot of losers like that. So that's guys pretty much it. Only thing I'm looking at tempting is Aussie yen, but let me take a look at hourly chart, and then we'll know what happened. Oh, by the way, Australian, we just had employment data coming out, so it was okay. You have mixed result of better employment, higher unemployment rate, but you also have a higher participation rate. So that's pretty much the picture for Aussie yen. For Australian right now. So we'll see what happened to this trade. I do feel it's, of course, like I say, tempting to get into it, but we will have to see what happened today. What happened in the London session, basically. Okay, guys, that's pretty much it for now. I'll be back tomorrow with another daily analysis. If you find this video helpful, or if you have any question, feel free to ask me. Otherwise, I'll see you tomorrow. Thanks for watching. Bye-bye.